Ladies and gentlemen, good day and welcome to Q3 FY24 results conference call of Patel Engineering Limited hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vaishnavi Ambokar from Kirin Advisors. Thank you and over to you, ma'am.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Patel Engineering Limited. From management side, we have Mrs. Kavita Shirvaikar, Full-Time Director and CFO, Mr. Rahul Agrawal, Head Strategic Finance, Mr. Aditya Bajaj, Investor Relations. Now I hand over the call to Ms. Kavita Shirvaikar. Over to you, ma'am.
Thank you, ma'am. Good evening, ladies and gentlemen. I sincerely welcome you all in this Q3 FY24 earnings call of Patel Engineering Limited. We have uploaded the presentation summarizing the performance of Q3 FY24 and 9 months and the press release along with the results on the stock exchange for your ready reference. Before I get in the details of the numbers, let me give you some insight on the industry scenario and the impact of the latest budget on the sector. India is one of the largest growing construction markets in the world, largely driven by infrastructure projects, and infrastructure development stands as a major contributor for realizing the India 2047 vision. In the recently announced interim budget, a significant increase in the outlay for infrastructure to rupees 11.11 lakh crore for the upcoming financial year has been proposed, which is an 11% increase over the last year, accounting for around 3.3 to 3.4% of the total GDP of India. The swift development of nationwide infrastructure is turning every region into an active contributor to the expanding economy, and the spending is expected to further increase in coming few years. The Indian government has been promoting investment in the renewable energy, especially in the hydropower sector, to achieve a balanced energy mix and reduce dependence on fossil fuels. Hydropower plays a pivotal role in the integration of renewable energy into the national grid, providing grid stability, peak load management, and energy storage capabilities. The country has set a target at the COP26 of achieving 500 gigawatt of non-fossil fuel-based energy by 2030. This is the world's largest expansion plan in renewable energy. The installed renewable energy capacity, including large hydro, has increased by around 128% since 2014. Hydropower currently accounts for around 47 gigawatt, which is about 11% of the total installed power capacity in India. Around 27,000 megawatt of hydropower projects are expected to be announced in the coming few years. These projects are currently at various stages of survey and investigation and under final clearance stage. The government has also increased its focus on hydro pump storage projects. Commission on a fast track, thereby accelerating the growth of India's renewable energy capacity. As per the ministry update, there are 39 hydro PSPs of 47 gigawatts being to be commissioned by the year 2029-30. Tunnel construction offers a significant opportunity for there is a pipeline of at least 870 around 2,600 kilometers. In the irrigation sector and aim is to provide.
Ladies and gentlemen, the management line has been disconnected. Please wait while we reconnect. The management line has been reconnected.
Thank you, Asupal. So now coming to irrigation and water segment, the aim is to provide water supply to all households in the next few years through schemes like the Jal Jeevan Mission. In the interim budget, there has also been allocation of around 70,000 crore for the Jal Jeevan Mission. So we see huge potential in the coming few years in all segments of infrastructure development, and especially in power, water and tunneling sectors where the company has a dominating presence. Now coming to the order book of the company, it currently stands at around 19,000 crore. These are orders where we were declared as lowest bidder for two schemes in an irrigation project by Maharashtra Krishna Valley Development Corporation. Our share in these orders is around 175 crore, and subsequently these have now been converted to LOA in the current quarter. Due to the election period, new order inflow has remained subdued in the last quarter, but we expect the same to pick up at a faster pace in FY25 post the general election. Now coming to the composition and breakup of the order book, which is around 19,000 crore, 61% coming from hydro sector, 21% from irrigation sector, around 11% from tunneling projects, and 3% is road and rest 4% from others. Out of that, 62% of our order book is from central government PSUs, which are AAA rated entities, and around 35% is from state government, and balance 3% is for projects in Nepal. On the execution and operation front, we are happy to announce one of our most prestigious and challenging projects, Sela Pass Tunnel Project, which is the world's largest B-line tunnel at an altitude of around 13,000 feet located in Arunachal Pradesh, which is nearing completion. The project is being executed for Border Road Organization BRO, and the tunnel, once commissioned, will provide all-weather connectivity in the region of Tawang, Arunachal Pradesh. The local people, tourists visiting the district as well as the armed forces will also get benefited. So with the outlook and focus of the government on infrastructure and increase in budget allocation for this year, we expect a large number of projects to come up for bidding in FY25 post the elections, and expect our order book to grow at a good pace in the coming few quarters. Let me now take you through the performance of the company in the quarter, which has been reasonably good, and we have continued the growth momentum on a year-on-year basis. On a consolidated basis, revenue from operation for Q3 FY24 is rupees 1061.01 crore, which is up by 11% from rupees 954.63 crore in the corresponding quarter in the previous year. This is due to strong order book growth and well execution of projects. Operating EBITDA for the quarter is rupees 142.09 crore. Net profit is up by 260% at rupees 70.24 crore for the quarter as compared to rupees 19.48 crore in the corresponding previous period. On a consolidated basis, 9-month revenue stands at rupees 3,200.93 crore, which is up by 19% from rupees 2,686 crore in the previous corresponding period. Operating EBITDA is up by 15.31% at rupees 452.72 crore as against 392.61 crore. Net profit at rupees 140.7 crore, which is up by 100% year-on-year from rupees 70.4 crore. On a standalone basis, revenue from operation Q3 FY24 is at rupees 1052.3 crore, which is up by 13.2% from rupees 929.39 crore in Q3 FY23. Operating EBITDA is up 10.73% at rupees 144 crore as against rupees 130.7 crore in the previous year. Net profit is up 100% at rupees 42.9 crore as compared to rupees 21.4 crore in the corresponding previous period. 9-month revenue on a standalone basis stands at rupees 3155 crore, which is up by 20.2% from rupees 2624.94 crore in the previous corresponding period. Operating EBITDA is 18.6%, which is up at 432.53 crore as against 364.4 crore, and net profit at rupees 214.99 crore, which is up by 200% from rupees 71.7 crore in the previous corresponding 9-month period. The sector-wise breakup for the revenue, from hydro it is 50%, irrigation 16%, from tunneling sector it is 18%, from road and others it is 16%. Now moving on to the debt position, the consolidated gross debt as on 31st December 2023 stands at rupees 1965.89 crore, against 1992.32 crore as on 30th September 2023. Total advances from clients as on 31st December 23 is rupees 794.89 crore versus 910.7 crore as on 30th September 2023. Further, cash and bank balance as on 31st December is around 120 crore. The consolidated debt to equity ratio is improved from 0.67 as on 30th September to 0.65 as on 31st December 23. Breakup of the debt is around working capital debt is rupees 1151.99 crore and balance is term debt is around 800 crore, which is expected to be repaid over next 3 to 4 years. The finance cost is on a consolidated basis is around 88.9 crore, which has reduced as compared to Q3 FY23 which was 105.3 crore. Our gross block of plant and machinery as on 31st December 23 is around 1,100 crore. Total employee base is around 4,500 employees. Our net normal working capital cycle is around 4 months, that is 116 days. On a consolidated basis, our diluted EPS from continuing operation has improved from 0.32 for Q3 FY23 to 0.87 in Q3 FY24. And debt divided by EBITDA has improved from 4.18 to 3.26 year-on-year basis. Further, I would like to update you that the company has filed for various settlement amounts under the Vivad Se Vishwas scheme, which was launched for the settlement of pending disputes related to government contracts, which were under ongoing arbitration. We expect to realize some of these arbitration awards through this scheme and or release few bank guarantees which were given earlier for part release of arbitration awards earlier. Same is expected to be received in the current last quarter. Receipts from this scheme will help us lighten the balance sheet and also augment working capital requirements for upcoming fresh orders. Overall, we remain positive on the outlook of the sector and enhanced government spending, thus expecting steady growth in our revenue. We expect our revenue to continue to grow around 15% in the coming years. That was a small brief from our side, and now our team here shall be happy to answer any further questions you all may have. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Tejas Shah from Unique Stockbroker. Please go ahead.
Madam, how is the pump storage demand coming up, and what will be our out of the total project cost, what is the normal our share of cost, and what is the future on the pump storage, if you can highlight?
So, hi Tejas, this is Rahul here. So, pump storage projects, lot of projects are expected to come up because pump storage projects are small hydro projects in that sense, and where the construction period will be smaller, and overall size of a project varies upon between 3 to 5 crores per megawatt. Okay, and means that full share will be ours, or it's a part of the share? So pump storage, we'll do civil work. So majority of the work in there is civil work itself. Okay. And how are we analyzing the land parcel monetizations? If you can throw some light on that. So we are looking at land parcel monetization, but not focusing too much on that right now. We have land parcels, some good land parcels, which we believe that in future upcoming time the value will increase. But we are still looking at some good offers. If you are getting offers for upfront payment, then only we look at it. Right now we are getting some offers for doing a development agreement or something which we are not much keen on.
Okay. Thank you.
Thank you. And the next question is from the line of Yashwanti from Cogin. Please go ahead.
Yeah, thank you so much and congratulations for the good set of numbers. So my first question is with regarding to your order book of around 19,000 plus crores. So what is the executable time for the same? How much revenue we can expect year on year?
So our book-to-bill ratio is around 4 to 5 years.
Okay. The second question is regarding to our debt. Currently, we have some BBB plus rating. So when it has been done and when we expect it to be done next, how are the process over that?
So post-March results, mostly we'll have to, go back to the rating agencies.
For review.
At principal level, our debt to equity has come down to around 0.65 level. So what is company's target going forward? Where do it seems to go down and how much time it will take?
See, debt, we have been reducing debt and now we have to, with the growth, we'll target to not reduce debt drastically, but we would like to maintain the debt or, even increase only working capital debt.
Okay. And so what is our current rate of interest on the long-term loan? Hello?
Sorry, I just missed you.
I just wanted to know what is our current rate of interest on the long-term loan?
Current rate of interest, our average rate of interest is around 11.5%.
What is our current working capital cycle?
Sorry, your voice is not coming that clear.
What is our working capital cycle?
Around 4 months.
And so if I may ask one more question, what is the outlook you would like to give going forward on our operating margins? Where are they headed?
So we would maintain similar margins around between 13-14% that range.
So that is for Q4 or even going forward?
Going forward also, we would like to maintain these margins.
Okay, thank you so much and I'll join back in queue. Thanks for answering my question.
Thank you. And the next question is from the line of Nikhil Malik from Whale Investments. Please go ahead, sir.
Hello. Yeah, am I audible?
Yes, sir.
Sir, my question is from slide 46, which is on the arbitration. So, can you give us some timeline when, do we expect something for the next quarter or let's say FY25?
So you are talking about the arbitration award. So see, we are expecting...
Which is in our favor.
Right. So out of that, there are some things which are under Vivad Se Vishwas. So we expect some monies to get realized from there. And then, post this is over, next year, then we'll start focusing on the court side also, whatever is left.
Okay. But, do we have a timeline that,
in
this quarter?
Is what we expect by next year.
So by
next
March,
year.
we expect around 150 to 200 crores to be realized. And going forward, next 3 to 4 years, we expect to
realize the balance funds.
Okay. And so my second question is, I've been following the Concalls and from the past 1 year or even more, I think we are talking about the land monetization. The whole year has passed out and, do we have anything concrete on the monetization part?
So this year, there has been not much keen interest coming up for few land parcels which we are looking to sell. There are few land parcels which, as I said, that we want to hold and for, valuation improvement in the future. And there are other land parcels, but being, this year went into, like we have some land parcels in Telangana, there were elections there, so not things were moving much. Elections got completed in November. So maybe, after general elections, everybody will be clear as to, because we are looking at upfront cash. We are not looking at doing a transaction where we do some sharing and then we wait on that developer to give us money later.
Right. Because, sir, the opportunity cost is, what we are paying as interest for the whole year. So, that's the opportunity cost we are paying. So, I think, you are taking care of that.
Yeah, see, the interest, the debt was never taken for real estate. It was only a plan to monetize real estate and reduce the debt, but debt is anyways being serviced from our normal operations.
Sir, if you see our interest cost net to net as compared to last year, it has been reduced. Overall, if you consider debt plus contracted advance, we have overall the liability has reduced.
Yeah. So we are reducing the interest obligation and the total amount payable, which it include client advances and debt. So that is happening from normal operations. But in the past, we have sold land parcels quite a bit to reduce the debt. Now, whatever land parcels we have, we'll sell, but we just don't want to sell at distressed price.
Okay. Right, sir. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, please press star and 1 to ask question. The next question is from the line of Ananya Swaminathan from C Square. Please go ahead.
Thanks for the opportunity. We have seen good improvement in our net profit margins in Q3 and 9 months as well. So can we see this same improvement to continue going forward?
See, our top line is improving and our interest costs have not been going up. In fact, it has come down. So yeah, in that sense, that improvement will come.
Okay. All right, sir. Thank you.
Thank you. And the next question is from the line of Dr. Ashok Nyayadhish from HLL. Please go ahead.
Thank you for the opportunity. Can you hear me?
Yes, sir.
Hello. Yeah, my question is, in the agenda of the meeting, today's meeting, there was a point of raising funds by QIP. What is the update on that?
So we have taken an enabling provision in the board because post elections we expect a lot of orders to come in and we may need funds to deploy for augmenting the working capital for these projects, and hence we have taken an enabling provision and at the right time we'll try to raise funds.
So now no decision has been made on that point now, is it?
So the decision is only made is that we have taken an enabling provision in the board that we may raise it.
And what would be the size of that QIP?
So we have up to 500 crores is what we have taken in the board.
Okay. Will that reduce the interest cost on the overall debt?
Yeah, so it will help to reduce the overall cost because if for new projects we will not be required then to raise more debt. So it will be a combination.
And my next question is, what I see is very low promoter holding. Do you have any plans to increase the promoter holding?
The promoter holding is around 39.5% right now. So, and promoter last year, rights issue, they had subscribed. So right now there is no plans for promoter to increase the holding.
Okay, that's all from my side.
Thank you. We would like to remind participants that you may press star and 1 to ask questions. The next question is from the line of Tejas Shah from Unique Stockbroker. Please go ahead.
The raising of funds. and I think that you've answered. But if you can just share, 500 crores is fine, but what is the price that we are looking at? Anything above 100 or anything ballpark figure that you might have it in your mind if I want to raise fund at the right price, not at 40, 50, 60, something of those lines.
No, obviously, so that thing is decided. It will be based on whatever is the market pricing and, guidelines for the pricing when we come up with the issue.
Okay. Okay, fine. And can you throw some light on the arbitration awards? I don't know if somebody asked the same question. If you can throw some light on the arbitration awards, how much are we trying to get within this quarter? And are we going to get more orders this quarter? But being election year, maybe because I think last time there was a talk, the orders will get postponed after election only.
So we may, get before that also, but we expect majority of the orders coming after elections only.
Okay, after elections only. Okay, fine, sir. Thank you. That's from my side.
Thank you. Ladies and gentlemen, please press star and 1 to ask questions. The next question is from the line of R.K. Khandelwal, an individual investor. Please go ahead.
Can you hear me?
Yes, sir.
The profit of this quarter include 52.88 crore of arbitration award received. Whether this amount is actually received or only provided, and if not received, then what is the expected time to receive?
So this is for an arbitration award which we received in the last quarter, and we expect that money will be received in the next year or so.
Whether this award is final or subject to further appeal by other party?
Sir, all awards, arbitration awards is always the other party can put an appeal, but it's an international award. So, the history says that, it is only a time process to realize the money.
I see. And now, in exceptional item, there is a loss of 15.97 is written off some project. How this is exceptional? Because this may be of our routine matter. And if this loss arises, whether this type of loss can be arises further also? If you can throw some light on this.
No, actually this is for a real estate project which we completed in Hyderabad. The project was a bit delayed and the project got completed. So whatever the unsold inventory was there, whatever sold inventory is there, on that we had to book losses.
Whether this type of loss will continue in some other project also?
No, we are not doing any other real estate development projects anyway. So this is a one-time exceptional loss only.
Okay. All right. This is from my side. Thank you.
Thank you. And the next question is from the line of Yashwanti from Cogin. Please go ahead.
Thank you so much for the opportunity. Hello?
Yes.
Hello?
Yes, ma'am.
Yeah. So, we have seen over the last 2 years, like from FY21 to FY23, we have seen almost we have doubled our count for the employees. Also, the equipment base will increase. That is clearly an indication that a good order inflow which is happening at company's end. So, what has been the development for the first 10 months of the FY24? Have we added any staff or the talent on the board? And how are the things happening at the company's end?
So, see, we have been growing. A few years back, our order book was almost half of what we have today. So, yes, and accordingly, we have been growing our employee base and equipment base also. And we have to get ready to, take the upcoming orders which are expected in the renewable energy sector where we operate. So, yeah, there are a lot of projects expected to come up and we are geared up to take them. That's why we have taken equipment and employee and everything so that we are ready to execute.
Okay. Sir, and out of the 19,000 plus crore order book, what was the net we have received in the current year?
So I think this year we have got some LOAs of around 3,700 odd crores.
The first 10 months we have received a LOA of 3,700 crores, right, sir?
Yeah, 3,700 crores LOA letter of awards have come. There were some projects which were L1 earlier, but the award has come in this year.
Okay. And sir, can you please throw some light on our export endeavors? What are our international presence and how are we moving and our strategies over there?
So international projects, we are only executing couple of projects in Nepal. Yeah, and it is more of projects which are strategically important for India only because the energy will come to India like that.
Okay. So we are trying any other countries to expand our presence? Do we see any opportunities around?
There are various, but yeah, we are right now a lot focusing on India only.
And based on the opportunity, we may explore.
Okay. Okay. So what are our strategies to mitigate the risk coming up from the infrastructure projects?
So strategy is very clear that a lot of projects are going to come up and we will take projects selectively. Obviously, we can't take everything. And so we'll take handful of projects so that we keep growing at CAGR of around 15% at least.
Okay. So any steps has been taken, like what we had done it in the last year for exiting from the non-core business. So any such things are still existing in the business, and are we doing anything on those business?
So whatever land bank and all we have, we will try to keep selling them. And
Other than land bank, other non-core, any other non-core business which we have?
I don't know. We are not doing any other non-core business currently.
Okay. So the monetization of the land bank will take another 1 year. We can see the 1 year also as the opportunity comes in.
Yeah, well, not exactly 1 year because there are huge land parcels, maybe 2-3 years, but yes, every year something will happen.
Okay. So what are your plans to reduce debt in the next financial year?
See, if we have to grow at the pace which we are looking at, so then, if we are able to maintain this debt with the growth, that is the first thing which we are looking at. And then if as and when monies get realized from arbitration awards and all, then we'll try to see if we can reduce the debt from that. Anyways, we have term debt of around 800 crores, which is to be repaid.
Get repaid over the period of 3 to 4 years.
Okay. Okay. And what is the outlook for Q4? Will you be able to maintain the Q3 level?
You're talking about Q4. See, on a full year basis, we have
Q4 of FY24 as compared to the Q3 of FY24.
See, quarter on quarter it is very difficult to, judge that way because our business is little seasonal that way. On an overall year basis, we can say that 15-20% whatever growth we are there for till 9 months, we will be able to maintain.
Okay. And we expect the same growth momentum to continue even for FY25, 15-20% growth rate?
Yeah, 15% is something which we are, looking at as we should be able to do.
Okay. Okay, sir. Thank you so much.
Thank you. And the next question is from the line of Chirag Shah from White Pine. Please go ahead.
Yeah. Hi. Thanks for this opportunity. So first question is, there seems to be some pressure on margins, both YOY as well as Q on Q. So any specific thing to note, or it's more driven by mix?
No, it's only driven by the mix executed right now.
Okay. Second is, if I have to ask you that as compared to your at the beginning of the year versus today, as compared to your expectation, how is the order flow for yourself or as well as the industry? Because you were aware that it's an election year, so there has to be so you would have been subdued in your expectations. So is it online or there has been significant slowdown from the government side on awarding orders?
See, being an election year, yes, it was expected to be subdued itself. We had expected that we could have received few more orders. But then, yeah, it is only a shift. It may happen after 6 months.
Yeah. And last question is, as on date, what is the contract that you have put a bid, which you think will come up in next 12 months or in next 6 months, or say post-election or 6 months? So what is that pipeline that you have, if you can just highlight, indicate something on that side?
Sir, pipeline-wise, I would say that, almost 2 lakh crores of work is there in pipeline.
No, that's for the industry. You will not put everywhere, right? Where you have already bid, and you are expecting announcements. I'm not asking future pipeline. What you have already bid and which you expect. What is that number, if you can indicate?
Don't have that exact number, but we can give you that, that we are expecting our order book, to grow at around 15-20% year-on-year, at least for next year.
Okay. Okay, great. Thanks. Yeah, thanks,
Thank you. Thank you. And the next question is from the line of Rakesh from Bhana Equity Advisors LLP. Please go ahead.
Yeah, hi, sir. I just want to ask one question. In other expenses, I am seeing a 71 crore figure, and year-on-year compared to this 43 crores. So can I know the jump? Is it any one-off over there?
You are talking about other expenses, right?
Yeah, correct, sir.
No, there is nothing one-off as such.
Mm-hmm.
There is nothing one-off as such. Yeah, it is all normal expenses only. Only the operations have improved, so maybe that expense has come this year.
Okay, thank you.
Thank you. And the next question is from the line of Ashka Trivedi from Kedia Securities Private Limited. Please go ahead.
Hello, sir, am I audible?
Yeah, ma'am.
So, sir, my question is on the International Arbitral Tribunal Award which we received. So, we have already provided for 55.2 crores of the value. And this is the partial final award as stated in the notification filed on December 30th. So, what is the full amount of the award we are expecting in this case?
See, we don't have an exact value. What is remaining is award for the costs incurred and for, during the course of the arbitration. So, that may not be too much in quantum.
Okay, so because here it has been stated that equivalent to USD 40.22 million as on February 2015. So does it have any relation with the leftover amount of the award or no?
No, see, 40.2 million is what we got. Out of that, so we had certain receivable from the subsidiary. So after setting that off and cost of funding taken for the arbitration and any future costs to be incurred for enforcement of this award, all that has been netted off by booking for, this income of 52 crores.
Okay, so sir, can we assume that we have received the majority part of this award?
Money is not yet received.
This is just an award we received.
Yeah. I mean, what we have provided for the majority part. That's what.
Right.
Okay, ma'am. Thank you so much.
Thank you. And the next question is from the line of Rakesh Arora from Go India Ventures. Please go ahead.
Yeah, hi. Thank you for the opportunity and congrats on a decent set of numbers. So I just wanted one question. So what's your current bidding pipeline? And as you are expecting more order flow in the future, so but currently how much we are bidding and how much bid capacity we have left with?
See, in terms of bid capacity, we have enough capacity to increase our order book to by 15-20% in next year.
Okay. And what's your current bidding we have done in terms of size?
So see, that is a continuous process. I don't have an exact number on that. But yes, I mean, what we can say is that we are expecting our order book to grow by 15-20% from the current levels in the next year, post-execution.
Okay. Okay. Yeah. Thank you so much.
Thank you. That was the last question. I will now like to hand the conference over to Ms. Vaishnavi Ambokar for closing comments.
Thank you, Tushar. Thank you everyone for joining the conference call of Patel Engineering Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.